Hello, my friends. Bitcoin and Ethereum technical analysis coming right up. We're going to be discussing that harmonic pattern that you can see on the screen beside me in this episode, seeing is Bitcoin in a potential reversal zone, a PRZ, and could that lead to a horrific retracement? Well, there's that and lots more to discuss in this episode, so we'll dive straight on into things. If you would like to help the channel out, and I would massively appreciate it, please hit the like button down below and leave a comment. It really does help. It helped a lot with yesterday's video, and I really enjoyed reading and responding to all the comments as well. So please do that. I look forward to seeing your thoughts on the crypto market. Let's dive on into the charts. Do-dum, 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 do-dum. So, welcome back to the charts, my friends. Thank you so much for joining me. Up here behind me, I have the pattern drawn out that we will be talking about. I'll just hide it real quick as we kind of introduce a couple of concepts before we talk about that in any great detail. All right, okay, so as we can see in this right-hand section of the, if I draw a line down the middle here, and we see since March that we've been going to the top side, actually overall we can see that mostly the volume has been diminishing. It has increased a little bit in this section as we come up to these highs, which is interesting, but we've seen it overall decline. And in fact, compared to this section over here, you can see this distinct downward slope in terms of the overall highs, in terms of the volume. Interesting stuff. That we can also make quick comparisons. For instance, this is a 3-day chart, and we can compare the top that we've got in just here at the minute compared to this last significant top that we had over here, and see that it is very much bearishly divergent as it stands prematurely. We can do the same thing on the daily time frame and see that we're actually, putting in a series of bearish divergence here along the top right at this point. You could look at that and say there's a bit of a wedge on the go as well, quite easily. In terms of the weekly time frame, that you can see as well that while we have come up towards these highs, that this is actually anchored right at the edge of the control zone. If we were to pull back away just now, then perhaps there's the possibility of that even coming in as being divergent as well. Although at the minute it's looking okay on that front. But there's that to be aware of. Now, there's a few other things as well that I could talk about, such as the historical volatility down there at the bottom of your screens. You'll see that it's actually quite low at the moment, which is interesting considering what we've seen happening on the charts. 3-day time frame shows us that quite clearly as well. Historical volatility indicator showing us it's quite low. That's indicating that there's been a lack of pullback, and that there's bound to be a move at some point. And well, that move could be towards the top side and blast through everybody's expectations. And we have, of course, been on an uptrend, and that's going to continue until such times as it doesn't. What we're doing here is taking a look and seeing if there is any potential for something else to be happening. And indeed, there is. There's this pattern by Scott Carney in his Harmonics. You can see on his website, actually, the harmonictrader.com, and it's got a trademark beside the shark pattern. Scott Carney is something else, by the way. Check it out. The shark pattern, TM. That's funny. If you ever see me doing Rocky Outcrop TM or whatever, just know that it's a little Easter egg for this in the future. Anyway, the shark pattern is a new harmonic pattern that I initially released in is blah, 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 blah. You can read through all of this, and believe me, there's a lot of complicated language in here with regards to extension numbers and everything else. And what we see on the charts that I've drawn in actually matches up with this. Although I do invite you to go ahead and look at this page on the harmonictrader.com/harmonic-patterns/shark-pattern, and you can watch this video here as well. I watched it too, just to make sure that I was saying the right stuff for y'all today. And this fits. And what actually happens is that you have a starting point here coming down to this this A point where we see a reversal going up the way, and unfortunately then that fails and it goes down, and then it fails to actually catch itself above the A point and pushes on down for a retracement that goes an extended retracement. Now there's various numbers that you can look to, such as sort of 1.13 or whatever. Actually, that's towards that doesn't matter. But this is 1.618 pretty much, so it's kind of perfect for that chat. Then on up the way we go, and you get this potential reversal zone in here at the D point. for the PRZ, for this harmonic pattern. And that's worked out by looking at the 1618 of the retracement between the points B and C. So if I just want to stick that on the charts here, then you will get to see the B and C retracement points. There's the BC retracement Fibonacci there. Pop this on. And the PRZ for this comes in here right between the 1618 and the 2.24. So the minimum you want to see the pricing going up to is the 886 Fibonacci retracement of this X to A, or this X to C, move. If I just stick on one of them so you can see the 886 coming in here, for instance, over here. And as you can see, this little inflection point that then we rose up past parabolically. This is the point at which when you start you're going to stop looking at all the other different patterns and you're saying, right, are we on for a shark here? And well, we've arrived at this point where we are, okay? And that's since that 886. So we've got that minimum 886 over there, and then we've gone up to into the actual zone itself between the 1618 and the 2.24. So I can actually put a rectangle on there. Is it this one? Yes, a rectangle to show us the PRZ. I hope you can see that on your screens. It's a bit faint, but I don't want to have it dominating our view. Then the next movement down would be this E, this suggested move that I've kind of drawn on here with this pink line. Now, okay, so that would take us down, and that the two areas for a retracement off the back of this come in at the C to D Fibonacci retracement. So if I just hide that B to C one for a second here, leave this PRZ on here, put on the C to D, then there's a couple of areas that you'd be looking to. First off, Scott Carney says a minimum of the that you'd be looking for is the 50%. And that comes in here, the 50 to the 618. That comes in between 10,400 and down to 8,900. That's your minimum profit zone. And then if you want to go extreme on it, the extreme area can take you all the way down to the 886. So I can put two profit zones on here for this. This is the first one. Don't be too alarmed when you see this second one coming on here. This is the pattern that this is telling you. Now, of course, this will fail should we see movements past 18,700 or so. Just so that you know, you can check out the harmonics and the Fibonacci retracements yourself. Of course, you're more than welcome to do so if you'd like to. But this is, of course, what we're looking at here. This could be the case. A few other little things of interest to you. You know, I've mapped them out. If you wanted to see, for instance, you know, the X down to the A Fibonacci retracement and how different things interacted with it around these points. And there's a few different ideas that we've had across time, you know, with regards to this, whether there's a cipher or other patterns on the go or different harmonics. We're at the point now where this is a setup for a perfect shark. Now, it's very unusual. All harmonic patterns to an extent are kind of unusual, I suppose, but this is one of these ones which is like, you know, as a perfect setup, it's crazy. It's right here for us, and we can see it, and it's interesting. So that would be a reversal in around about these 17,000 areas. In the chat yesterday, when I was talking with people after the episodes at the Discord, I was talking with somebody who was interested in knowing what are the chances of there being a reversal from the 17,200-ish area or 17,100 or 17,000 whatever. We've been up as high as 17,100 today. Prices have come back down towards, well, you know, just a little bit below that. Should we see them going down the way, then we can be pretty sure that there's some things happening for us, things be going on. Little ways of kind of managing this idea and our expectations, therefore, thereafter, can come back in again if I just pop on, you know, for instance, the 236 here of this the C to D point here, the March to the highs, March lows to highs, Fibonacci retracement, and see that if we push on down past the 236, that we be going down past the 116, the 1.618 Fibonacci retracement point of the B to C move, you know, the extension, which is forming the edge of this potential reversal zone, and kind of confirming this as being a possibility, or as being on, really, is activated, and then we're looking down towards these zones over here thereafter. So that could be an area for you if you're looking at sort of interim pullbacks or whatever, and there's various different ways that you could kind of manage that, but we've talked about everything that you would need to know for your trading for this time period anyway, as it happens in the run up to this. Now, this is just a new idea, which is really, really, really quite great, so check it out yourself. if you want to. Right, nice one, excellent. That really does cover what we need to know about this for today. And what I'm going to now do is move on over and quickly take a look at Ethereum and see how it's been panning out here. We've not taken out the previous highs. This Fibonacci still remains in place, but we have done with today's price action is actually moved back up above the 236 in here, which was in there at 466. As you can see, the prices today have been down at a low of 460, and now they're up at highs of 470, just low of the high of the day at 473. And we can see that this all corresponds quite nicely to the breakout of this wedge pattern coming back down and then retesting it here in terms of will it then operate as support or resistance thereafter. There's another way that you can look at this now, of course, because this low came in at the 618 and the wicks pushed down past it, but the bodies didn't close below it. And looking over here, you can see that's where our previous low was then as well. So what you can do, of course, is just kind of accommodate this in amongst the price action and say that it's another one of these this series of higher lows we've seen in a structure which looks kind of like a wedge, but is also kind of like a parallel channel towards the top side. And then I can kind of relinquish this for just now and look in the background instead at the parallel channel that we already have there anyway, describing this kind of current scenario for us. And we've gone up above this median line, currently looking towards the median line and the 236 in terms of being support for us. Profit taking targets, of course, come in there at the 478 area where we saw our previous highs. If we want to push on past that, then that'd be quite nice and dandy. If not, and we're looking at this slightly diminishing volume while we have these two sideways areas and a head, you could be looking at a sort of head and shoulders evolving itself out over time. For instance, here in the 12-hour time frame, it's we've not got an increase in volume here, we've got a decrease. If the volume then does increase at the point at which we go past the 1618 or the 0.618 down there at 445, then we'd be looking for further potential moves down the way. Easy examples of which come in if I just take it down the 618 down here towards this lower end here at 408, and you can see that's where this former upward sloping support would come in at for your story to kind of tie together for you on that front. In terms of looking up to other highs and stuff like that, we've got our previous high up there at 489 in terms of a subsequent profit taking target. I don't think I need to go on too much about the details towards the top side right now with regards to all of that. I mean, it could as well with other various ways. Another one for people is 512, where we have the top end of that pitchfork, and also where we have the 1618 Fibonacci retracement point up there as well, 512. Confluence for us if that's the next target towards the top side. So there you go. Don't say I didn't tell you all the ups and the downs. Here's Ethereum versus Bitcoin, and taking a look at this, there's this parallel channel towards the downside that we remain trapped within. We came up, touched the top end of it perfectly, but didn't actually manage to move outside of it. Dropped back down below the 50% area, looking down towards our previous zero, down here, or indeed down towards this 618 golden pocket that we've not actually come in and filled in quite yet in terms of this one. And we have this liquidity zone drawn in here as well in amongst this area. Could we be coming down here towards this 25 area? Well, I wouldn't get too, hung up about that until we were below 27, 26. I suppose with regards to this, we've got a higher low at the minute. There's no sort of continuation divergence with regards to that one quite so clearly on this time frame. Go to the 12-hour time frame and see how we've been doing. So, okay, little bit perhaps of bearish divergence was there, maybe kind of at the top just here. No, not really, but so we've been trending down the way. Are we going to continue to trend down or not? Well, let's see. If this turns into a higher low, then this would be excellent. Need to take out our previous highs. If we go up towards 30 and push outside this parallel channel, things start to look great for this thing. If we go down below 26.59, things start to look really stinky for this one. That's kind of where we are at the minute. Our current range to be looking to then between that is 26666, 29999, and then beyond those zones, going back to all the broader topics that we've talked about in the recent past anyway, with all the different targets. So you'll remember what they are. For instance, down here at 786, down there at 21, if we do push on down past this zone, which I would expect to operate with a bounce in this area should we come down to it to try it out. So that's our current view on this one. Then further targets towards the top side, 31, 33 are your next ones really towards the top side, 21 towards the bottom side should we take out 25, 24 and a half. Cool, excellent, nice one. That's everything covered. Less than 15 minutes, hopefully. When I add on the intros, it'll be about 15 minutes, 30 seconds, whatever. That's all good. Nice one. Thanks so much for joining me. Really do appreciate it. And yeah, if you want to help this channel out, then, you know, like and subscribe. If you hit the like button, it would be absolutely excellent because it helps the channel get more views throughout the day. And of course, if you leave a comment, excellent. I've discussed an awful lot in here, which is very much commentable about. So I'd love to hear what your thoughts are on it. Go ahead and let me know. I'm super interested to find out. And I hope this shark idea is, you know, the first time you've seen this with regards to the current price action. And you go ahead and check it out and verify with me that that is indeed correct, because it is interesting stuff, is it not? See you next time.